Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh and Priyanka Uppal, and over the next 1 hour, we'll get you news and updates from within the country as well as across the globe, tell you which stocks you should be keeping on your radar, and tell you what the brokerages are saying as well. But first things first, we do have some somber news for you because Shyam Benegal, acclaimed film director Shyam Benegal, passed away at the age of 90 in Mumbai last evening. The legendary director, known for breathing life into parallel cinema in the 70s and the following decades, breathed his last at Mumbai's Wockhardt Hospital. Benegal directed iconic films the likes of Ankur, Manthan, Nishant, Mandi and the teleseries Bharat Ek Khoj as well. Benegal's filmography is a critical commentary on society and its issues. Over the years, his work in fact also serves as an inspiration to aspiring filmmakers and students of cinema.
Now moving on, let's talk about the global cues. Monday was a relatively sparse day of trading. S&P 500, that one rise around 0.7%. Nasdaq also closed about 1% higher. 30 stock Dow also finished up nearly 0.2%. Tech names and semiconductor stocks were among the big winners of the day, lifting S&P 500 as well as Nasdaq. Meta platforms jumped more than 2%. Broadcom advanced more than 5%, while Nvidia rose 3.7%. Remember, it's a truncated week. It's a holiday shortened week. Stock exchange will close early at 1 p.m. today in US, and of course it's closed for Christmas. Bond market will close at 2 p.m. today. Talking about European markets, that one closed just above the flat line on Monday, and Pan-Asian Stock 600 Index, that one provisionally ended the session marginally higher by 0.07%. But what about oil, Shreyansi?
Well, absolutely. Priyanka, oil has been having quite the week, and in terms of the kind of moves that we saw coming in for oil, it's been quite the flip-flop in terms of what we've seen happen the last few weeks. And when you take a look at what really happened on Monday, you did have oil prices edging lower. So there's been that move that you've been seeing where we've been looking at the same factors in a different way every other day. But when you take a look at what really happened yesterday, Brent crude futures down by 0.4%. $72 a barrel is the kind of level that you saw coming in for Brent, and US WTI as well. A slide of just about 0.3% coming in for that one, $69 per barrel. Now, my query analysts do project a growing supply surplus for next year, which will also be holding Brent prices to an average of $70 per barrel, down from this year's average of $79 a barrel, and that is something that they've highlighted in a December report as well. So that at least is what brokerages are expected. And the US dollar was of course hovering around 2-year highs on Monday morning after hitting that milestone on Friday. A stronger dollar makes oil more expensive for holders of other currencies, so that's definitely something that we're looking at by the way of factors. And when you take a look at gold next, gold prices also edged lower, so similar moves coming in, but it's a holiday season trading, so thin trading in terms of the kind of volumes that you're seeing coming in for gold prices as well. But spot gold was also down 0.4%, and $2,611 per ounce is the kind of level that you saw coming in for gold as well, Priyanka.
All right, of course, the way you mentioned, it's a holiday shortened week. US market, in fact, let's get you the key events to track. US market closes early today around 1 p.m. And even bond market closes around 2 p.m. today. UK also market close early due to Christmas Eve. Back home in India, Vedanta to trade ex-dividend today, and of course, let's not forget, Bank of Japan will publish the minutes of their October meeting. So that gives us a sense of their way forward from here.
Well, absolutely. That gives us a sense of the way forward. But let's then kickstart the day with some global stories that are making it to the headlines. Then, sales of new homes in US rebounded in November and jumped 5.9% to a seasonally adjusted annual rate of 664,000 units. Now, this comes after being depressed by hurricanes in the prior month. Meanwhile, analysts are also expecting that the rise in mortgages could dampen the sales next year.
Okay, in the meantime, big moves in the auto world. Honda, Nissan and Mitsubishi Motors have signed an MOU to explore a potential merger that could shake up the EV game. The plan to set up a joint holding company and boost their competitiveness against Tesla and even the Chinese EV giants. Here's what they are gunning for. Combined annual sales of a whopping 30 trillion yen as well as an operating profit dropping 3 trillion yen. The merger talks are expected to wrap up by June 2025 with a timeline that includes delisting Honda and Nissan shares between late July and August 2026. This is when the holding company will take shape. So the biggest question is what this potential merger means for the global EV race and the future of these brands. Honda, Nissan and Mitsubishi. We hear directly from Honda's CEO about this bold strategy. Listen into this.
Today, Nissan and Honda reached an agreement to officially kick off discussion on business integration and signed an MOU following a board resolution at each company. Our aim is to increase mid and long-term corporate value by addressing the changing market, including emergence of vehicle intelligence, electrification, and generate synergy through an integration of the two companies' resources such as talents and technologies. Through business integration, which is deeper than the current strategic partnership, we will be able to truly increase our competitive edge that will not be possible under the current collaboration framework.
Alright, and that was important commentary coming in around the Honda, Nissan and Mitsubishi merger then. But in other news, US automakers Ford Motor and General Motors will be donating $1 million each along with vehicles to the US President-elect Donald Trump's inauguration next month. Remember, major tech companies, the likes of Amazon and Meta platforms have also donated for the inauguration as well.
All right, big news from Washington. US President-elect Donald Trump has added a tech twist to his cabinet by appointing SRI Ram Krishnan as his senior AI policy advisor. Here's the exciting part. SRI Ram is an Indian-American with a stellar track record in big tech. Think Silicon Valley powerhouses like Microsoft, Twitter, and even Meta. What could his appointment mean for AI innovation and policy in the US? My colleague Sumita joins us to walk us through the fascinating details about this tech wizard and what he brings to the table as part of the Trump administration starting next year. Sumita, tell us more that you've gathered.
India-born Americans, you have Jay Bhattacharya, who will be taking a look at the, health institutes of the country, the United States. And you have Kash Patel, who's been named as the FBI director, Vivek Ramaswamy, who's going to be alongside Elon Musk, an advisor, working as an advisor on DOGE, that department, that ministry. Then you also have Harmeet Dillon. All of these people are going to be India-born Americans, are going to be part of Trump 2.0 administration. But speaking specifically about SRI Ram Krishnan, remember, he's been a techie for a very long time and he's worked with Microsoft. He started his career with Microsoft in 2005. Then he worked with Facebook. He also worked with Twitter, Snapchat. And of course, in his recent stint, he was a general partner at Andreessen Horowitz. He recently left the firm. He left the firm in late November. But most importantly, he's also worked with Donald Trump's good friend, Elon Musk, on Twitter's transformation. Remember, Elon Musk will be heading that DOGE ministry or that department that will help in reducing government spending and, of course, increasing efficiencies. Other than that, SRI Ram Krishnan also is a podcast show host. So his role will be to devise AI policy for America, given the rapid strides that, of course, the technology has taken the world over. And, of course, this is going to be important geopolitically as well, because when you see the Prime Minister travel or, of course, all of these, bilaterals happen between leaders of, between these global leaders, AI definitely is an important part of that. And, of course, navigating AI safely whilst at the same time there is efficiency is going to be something that he's going to be looking at. He also tweeted, and I quote, that he's going to be working very closely with David Sachs, who is an AI and crypto czar.
Well, absolutely, Sumita. Big news indeed. Thank you so much for getting us the latest updates on that change of guard and appointment then. But moving on then, this year we saw one of the biggest media mergers, Reliance, Viacom 18 and Walt Disney. What are the key details of this and which were the other big M&A deals of 2024 then? Here's a special report.
Reliance Industries and Walt Disney Co. completed India's biggest media industry merger of 2024. The media assets and JioCinema businesses of RIL-controlled Viacom18 merged into Walt Disney Star India to form a joint venture in November. RIL invested about $1.4 billion into the joint venture, which in turn allotted shares to Viacom18 and RIL. The deal valued the JV at about $8.5 billion post-money. India's biggest cement maker, UltraTech Cement, announced plans to acquire a controlling equity holding in India Cements, controlled by tycoon N. Srinivasan, in July. The acquisition has narrowed the rivalry in the domestic cement sector with Adani Group, that has grown to become the second biggest operator in the industry since acquiring ACC and Ambuja Cements in 2022. The transaction will also help billionaire Kumar Mangalam Birla's Aditya Birla Group maintain the edge for UltraTech over its peers. Adani Group-controlled Ambuja Cements signed a deal to acquire Orient Cement from its promoters led by CK Birla Group in October. Ambuja acquired about 47% holding in Orient at the firm's equity value of 8,100 crore rupees. Ambuja Cements is seeking to boost its output capacity to over an annual 100 million tons this financial year from about 90 million tons currently. Past suitors in the deal had included Ambuja's rival Aditya Birla Group's UltraTech Cement. Aster DM Healthcare in end November announced plans of merging with Quality Care India, that operates care hospitals chain and controlled by US private equity firm Blackstone. The merger, the biggest for India's healthcare industry in 2024, followed months of negotiations and detailing the final plan by both the firms. The merged listed entity will be named Aster DM Quality Care. Blackstone will become the biggest shareholder, and Aster DM's chairman Azad Mupin will head the merged entity. In October 2023, Blackstone acquired care hospitals that had subsequently signed a deal to buy Kerala-based Kim's Health. Aster DM separated its Middle East and India businesses in April.
With the merger of Aster and Blackstone-backed Quality Care, we are actually creating one of the top 3 healthcare platforms in India. The combined strength would be around 10,150 beds. We will have 38 hospitals in 9 states and leadership in 28 cities.
Private equity firm EQT Partners acquired a controlling equity stake in healthcare technology company GEBBS from peer Chris Capital. Media reports had flagged the deal size close to $900 million. EQT's competitors in the deal included Hill House Investment, whom it beat at the last mile to clinch GEBBS.
All right, with this, we stay for a short break here. More to come on the other side of the break. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get your check going on the Asian markets and see what they're up to. And it's quite the mixed start to the day coming in for the Asia Pacific market. So when you take a look at Japan's Nikkei, that's the one that's holding on to a tinge of red on your screens as well. 0.2% downtick coming in. On that one, minutes of the Bank of Japan's October meeting also showed that members agreed to stick with raising rates if the economic and inflation outlook is met. And other than that, in terms of news flow, you also have Japanese automaker Honda that surged 15%, while Nissan shares fell over 5% a day after they announced starting formal discussions to merge, paving the way to create the world's 3rd largest automaker by sales, something that we've told you about previously in the show as well. But South Korea's Kospi was also the one that is holding on to a tinge of red on your screen, 0.6% downtick coming in for that one. Now, South Korea's consumer confidence slipped to the lowest in over 2 years, so that's some news that we have coming in for South Asia as well, and South Korea as well. And when you take a look at Hong Kong's Hang Seng, that's the one that is up 0.6% thereabout. It has in fact deepened that shade of green coming in on Hang Seng. And when you take a look at Shanghai as well, 0.4% uptick coming in for that one. Even ASX 200 is also up as we speak as well. Let's try and get that on the screen. 0.1% uptick coming in for that one as well. So not a very strong uptick coming in, at least for ASX 200. But you do have South Korea's Kospi as well as Hang Seng holding on to those South Korea's Kospi on the flip side being down along with Japan's Nikkei, and you do have Kospi holding on to that gain coming in, Hang Seng holding on to that gain coming in, Hang Seng as well as Shanghai and ASX 200 holding on to a shade of green as we speak as well. Now back home, of course, we shut shop around the 23,750 levels, and currently in terms of what is being implied, we're looking at quite the muted start coming in, mixed handover coming in from Asia, and not a very strong handover also coming in from Wall Street as well. So let's really see how that pans out for us, Priyanka.
All right. So only Nikkei, which is trading in red, else we've got a strong set of cues coming in from other Asian markets. But let's get you what we have on the show ahead. At 9:20, we speak to Anand Radhakrishnan, who's a managing director for Sundaram Mutual Fund. At 9:30, we get you a special series, ET Now on the Go, and this time it was Bangalore. Vivek Gupta, MD and CEO from United Breweries, tell us their way forward. At 9:40, we speak to Abhijit Roy, MD and CEO for Berger Paints, to talk about the paints competition intensifying. And 9:50, we speak to K. Ravi Kumar, who's the former CMD for BHEL.
Welcome back. Thank you so much for staying tuned in. Time now to get you some more news and updates then. And Finance Ministry has issued a review of the trends in receipts and expenditure at the end of the first half of the financial year 25, from economic growth to the risks threatening the same as well. Prakash is standing by with a full review then. Prakash?
The Finance Ministry has issued a review report of the trends in receipt and expenditure at the end of the first half of the current financial year, where the Finance Ministry has clearly mentioned that the budget 2024-25 was presented in the backdrop of global uncertainties, but India's strong, macroeconomic fundamentals have shielded the country from vagaries affecting global economy. Along with that, the country's strong microeconomic fundamentals have helped the nation pursue growth with fiscal consolidation. Along with that, as a result, India continues to hold its position as one of the fastest growing economies in the world. However, the report has clearly mentioned that the risks to growth still remain, but the government is committed to pursuing the glide path of fiscal consolidation, which is below 4.5% by the end of financial year 2026. The thrust will be improving the quality of public spending, at the same time, and strengthening the social security net for the poor and needy will be prioritized.
All right, thanks very much, Prakash, for getting that insight on this piece of news. Moving on, sources tell us that government is likely to hold inter-ministerial meeting next month on sugar sector demands. The meeting will be chaired by Home Minister Amit Shah with Union Minister Nitin Gadkari on the panel. My colleague Samir is tracking this piece of news, this exclusive news. Samir, over to you.
The sugar industry is having high hopes with the next IMG Inter-Ministerial Group meeting that is likely to take place next month, January 2025. And the high hopes is related to the sugar industry's long pending demand of allowing sugar export to certain quantum. And these high hopes are based on two big factors. The first one is that government will be having much more precise, much more accurate data in terms of sugar production and the closing stock. And these data will be based on scientific surveys and mapping, and also the industry data will be provided. So first one is the much more accurate data, and the second one is that the Union Cabinet Minister Nitin Gadkari, who is also a part of IMG meeting, he has already given kind of a soft support to industry's demand. He has said that the demand by sugar industry is very much genuine, keeping the context, the global scenario. The demand is very much genuine, and the government will definitely look up to these demand. So based on these two factors, the industry hopes that this time this IMG meeting will definitely bring some positive outcome or some sort of relaxation for the long pending demand. Even in the current scenario, if you see, the estimate suggests that for current sugar season, the production could be somewhere around 320 LMT The domestic consumption stands around 280 to 290 LMT, and the sugar diversion for ethanol will be around 40 LMT, which might provide a room for allowing export of 20 LMT. But these all numbers are currently estimated. The final numbers or the concrete numbers will be based on the scientific data, and based on which the government might take up a final call. And this IMG meeting is termed as very crucial for the sugar industry's demand, the long pending demand of allowing sugar export.
Well, absolutely, Sameer. That will definitely be a key meeting to watch out for, and we'll definitely be getting more updates for that particular meeting. But moving on, then 2024 turned out to be a promising year for IPOs, with several high-profile companies going public as well, listing on the bourses, from tech giants to emerging startups. These public offerings reshaped market dynamics and also captured investor attention for 2024 as well. In fact, Gaurav is joining in with the IPO landscape for the year and key expectations that we are penciling in for 2025.
When we talk about 2024, it is definite to say that IPO was one of the biggest hits in 2024. In fact, when we talk about some of the numbers, in 2024 itself, we have seen the record-breaking number in terms of number of deals as well as number of value of deals in terms of secondary market activities. We have crossed around 1.6 lakh crore rupees in terms of value in 2024 in terms of values. At the same time, this is also was a record-breaking after the year 2022. Let's not forget that it is not just this. We have also seen the biggest IPO of India in 2024. Earlier it was at LIC, which raised around 21,000 crore rupees, but in this year we saw Hyundai Motors came up with the IPO and they raised around 27,000 crore rupees via IPO. And it was not just the IPO size. Even with this size of IPO, we saw subscription hitting more than 2 times for Hyundai Motors. So definitely there was some euphoria as well as there was some positive response in terms of IPOs. Other than that, let's also look out at some of the companies who were there and who were actually buzzing. The mainstream IPOs and the highlight of the 2024 remains with Hyundai Motors, Swiggy, NTPC. Then we have got Vishal Mart, which was recently listed. Other than that, we also had some new age technology like Ola Electric and Mobility, Vari Energies. These were some of the hit IPOs where we saw a tremendous response as well as a size of the IPO was actually significant. Other than that, when we talk about these players, it was not just the size. These players also outperformed the market. So when we talk about Swiggy or Bharti Hexacom, these companies not only delivered good returns when it comes to listing, but also delivered good returns after listing. We have got Swiggy, who delivered more than 40%, Bharti Hexacom more than 40%, and at the same time we also had some of the multi-baggers in terms of IPOs. So we have got Jyoti CNC, Premier Energies, who delivered more than 200% of the returns post its IPO. Other than that, we have got Orient Technologies, EPAC, Platinum Industries. Now you may think that 2024 has now ended and we may not see that rally, but it is not true. In 2025 itself, we are seeing some kind of same pipeline for IPOs. In fact, when we talk about numbers, we are getting 34 companies who have already got approval for the IPO perspective, and 55 companies are already waiting for approval. These 34 companies can raise up to 50,000 crore rupees in 2025 itself, and the 55 companies who are waiting for approval may raise around 1 lakh crore rupees. And in fact, when we talk about these companies, 2025 might be a year where we may see the holding companies actually listing their subsidiaries, and that is the reason why this is going to be special. So we have got some big names here. We have got HDFC Bank, Hero MotoCorp, who may come up with their subsidiaries IPO. We have also got Reliance Industries. We know that Reliance Jio has been in talk of IPO, and it has also been a big short player. Also, when we talk about some other players like Prestige Estate, Canara Bank, they are already listed, waiting for listing. Other than that, we also have some mainstream IPOs which may come, which is LG Electronics, NSDL. Then we have got Hexaware Technologies. So a lot of things are going to come in 2025 as well. So definitely 2024 was a big year for IPO, but let's not forget that 2025 also has a strong pipeline, and on back of this, we will be definitely watching out on new companies and new listing and how they trade for investors in coming years.
All right, thanks very much, Gaurav. Not just that 2024 was, a lot of action from primary market. In fact, we saw a lot of bumper listing also, and now all eyes are on 2025. But then as we edge closer to the end of 2024, let's take a look at the sector that outshined others. Despite a volatile environment and macro challenges, that's the real estate space we are talking about. Stocks have soared anywhere between 20 to 60%, and most major players have shot past their booking targets for the year. Anisha joins in with a look of how the sector performed and what's in store for 2025.
Well, real estate sector has clearly been the star performer in 2024, with the sector index resulting into a gain of almost 43% so far. Individual names like Oberoi Realty, Prestige Estates, Godrej Properties have fared much better, with the returns being anywhere between 50 to 60% for the year. Even DLF, for that matter, has managed to return a solid 20% gain in the year gone by. In fact, the reason for that is also backed by fundamentals, because at the start of the year, the companies had come out with tall targets when it comes to their pre-sales as well as booking targets. But the companies are likely not only to meet these targets, but most probably are going to beat these estimates as well. At least that is the view coming in from a lot of analysts on the street. For instance, you have the likes of Prestige, Godrej Properties talk about the booking targets being anywhere between 25 to 30,000 crores in the year, and they're more likely that they are going to do a number which is better than that, and that's going to be the case with a lot of other companies as well. But you know, this is not something which has been only driven by more number of sales happening, because if you look at the data that Anirog has to say, in the 9 months of 2024, while the overall housing sales has gone up by just 2%, the supply is actually down 2%, which begs you to ask the question, then what exactly is driving this growth? The growth is actually coming from pricing, and that's the reason we have seen massive shoot up when it comes to the real estate prices in the country. Per square rates in the areas of Gurgaon, etc., have shot up quite meaningfully, and that is what is driving this growth. In fact, what is also supporting the sentiment is not only the first-time home buyers or the actual users, it's the institutional flows which are coming into the sector as well. So if you look at the institutional flows that Colliers has to talk about, it's a whopping $4.7 billion is what we have seen this year. In fact, even if you look at the investment profile, as far as the alternates or the AIF investments is concerned, real estate is clearly the favorite, because that has seen inflows to the tune of almost 75,000 crores, and that tells you that it's a lot of investment money also which is going into the real estate sector, and that is partly the reason of the prop up that we have seen in the prices and the fundamentals. In fact, the big question is whether this rally will sustain as we head into 2025 or not. Well, most of the brokerages believe that this is likely to be the case. JM Financial believes that premiumization is a trend which is likely to continue. That's benefiting the sector, plus diversification as well. Colliers on the residential market is saying the uptick in luxury is expected to sustain. In fact, the expansion into tier 2, tier 3 is also something that can play out really well. And not just residential, industrial too is expected to have a good run, given the fact that supply-demand dynamics continue to be quite favorable. So overall, 2024 was a stellar year. 2025 might not see the same rate of return, but perhaps the fundamental and structural up move might continue.
Well, absolutely, Anisha. It does look like real estate was cementing sturdy gains when it comes to 2024 on the back of pricing as well, like you've mentioned. But moving on then, as we head closer to the end of a volatile 2024, 2025 also promises to be an eventful one. Politics will continue to take center stage as Donald Trump assumes gets the keys, in fact, to the Oval Office. Now, his tariff rhetoric will be key to watch. Meanwhile, you do have most economies that'll be going through a rate cut cycle, which will have implications for markets. And how can we forget the live economy? So what are the big events then that should be on your radar? Varun is joining in with the answer. Varun?
The year 2025 is going to be an important year for India not only India, but also the world as a whole, because the first thing that you need to keep an eye on is Donald Trump, because the 47th president of US is going to take office from the month of January, and that is the time when the whole action starts, because analysts on the street are expecting that this would result in a trade war-like situation across the globe, especially he would start raising tariffs on China, and Chinese economy is not in a good shape, and they are depending upon stimulus for their growth. And if he starts putting tariffs on China, then let's see what is the impact on China and also the world as a whole. Other than this, you need to keep an eye on interest rates, because across the globe, if you look, the central banks are now cutting interest rates. It is expected that Fed would cut 2 interest rates in the year 2025. RBI will start cutting interest rates in the year 2025, and also keep an eye on Bank of Japan, because it is expected that Bank of Japan might start raising more interest rates in the year 2025. Now keep an eye on elections, because elections have an impact on Indian stock markets in 2024 and in 2025. If you look, there are Delhi election and also Bihar Assembly elections. So these are the 2 important elections that you should keep an eye on. When it comes to equity markets, there are lot sizes changes which are going to happen in Nifty, Nifty Bank, and across the indices. Also, From Feb 1, 2025, no calendar spread benefit on expiry date would be available, and upfront collection of premium while buying options would be from 1st of Feb. Also, the intraday monitoring of position limit would be from 1st of April 2025. So there are several changes in equity markets that are going to happen. In bond markets, if you look, Indian sovereign bonds, they would enter the FTSE Russell in September 2025, and also the Indian FAR bonds will be included in the Bloomberg Emerging Market Local Currency Government Indices from January 31st, 2025. So other than equity markets, also keep an eye on bond markets. The interesting themes that you need to keep an eye on are the rate sensitive, because interest rate cuts will start in India. Also, quick commerce, because speed has been the essence of the year, and we have seen several quick commerce companies, reducing their overall delivery time. Keep an eye on IT companies, especially artificial intelligence, because companies are adopting AI and also they are increasing their spends. So this is one thing that you need to keep an eye on. Other than this, there are several events that will be keenly watched, especially by the fans, because Coldplay, they are coming to India in the month of January. Also, Green Day would be performing in Lollapalooza Festival in March 2025. Sulafest, this would return after a gap of 5 years in the month of Feb 2025. The first esports Olympic that would be held, in 2025. Also, the Mahakumbh Mela that would be held between 13 Jan to 26 Feb 2025. So there are several events that you need to keep an eye on: political, also elections, stock markets, and some other which fans are eagerly waiting for.
All right. Thanks so much, Varun, for all that comprehensive report. That's a look, in terms of not just political, even from FNO space to what to watch out for 2025. Thank you so much for this report. We stay for a short break here. Don't go anywhere. More to come on the other side of the break. Thank you so much for tuning in. You're watching Market Cafe on ET Now. Now let's go across to Somit, who's standing by with the latest updates on the November air traffic. Somit.
Well, if you look at the month of November, which is one of the holiday periods for the air traffic and the aviation industry, the air traffic growth was around 11.6% on a YOY basis. Indigo has yet again outperformed the industry. The growth for Indigo was around 15% on a YOY basis, and this was one of the highest growth that Indigo has reported compared to its peers. Apart from that, if you look at in the month of November, the industry had also achieved the milestone of more than 5 lakh domestic travelers on a single day. So that was an important milestone coming in for the aviation industry. Now when it comes to passenger load factor, which is also a measure of capacity utilization for airline companies, there if you look at Indigo's passenger load factor climbed to around 90% in the month of November, which is the second best performance given by Indigo in the month of November in the last 5 years. Now and so far if you look at in the month of December, the passenger load factor for Indigo has been on an average around 92%. Also one of the important points that we should highlight and we should note here is that on the market share front, Indigo's market share has inched up to a record high of 63.6%, while that of Air India has fallen to an 11-month low of around 27.3%. Now Indigo has improved its market share around 30 basis points on a month-on-month basis, while Air India Group has lost its market share by around 120 basis points on a month-on-month basis. Now another beneficiary of this loss of market share for Air India is SpiceJet, but SpiceJet's market share has been increasing on a very low base that we had seen. Now we also need to note that Air India PAC has seen a decline of around 210 basis points in market share from its peak that we had seen back in August, and now currently it's around 27%, and this was the period where they were getting less aircraft supplies from Boeing. Apart from that, integration issues with Vistara and Air India Express might have also led to this drop in market share for Air India PAC. Now out of this 210 basis points loss of market share that Air India PAC has seen, 130 basis points has gone to Indigo Group, while 80 basis points has gone to SpiceJet. So these are basically what has come in, the key takeaways that we have seen coming in from the air traffic data for the month of November.
Absolutely. Thanks, Somit, for getting us a lowdown on that air traffic data coming in. Domestic air traffic growth up 12% on a year-on-year basis in November, and it was really Air India that had a market share hitting an 11-month low at around 27%. But let's get you the list of stocks that you should be keeping on your radar bright and early this morning. In fact, we do have Janay in the studio with just that list. Janay, tell us which are the stocks that make it to your list then?
Well, definitely, let's start up with Bharat Forge. The company has approved a further investment into their wholly owned subsidiary Bharat Forge America. They will be infusing funds of about $64.5 million into that. Moving on, Oberoi Realty, that will be in focus as the company has executed a development agreement for a land parcel approximately about 81 acres in Alibag. Now they will be building a 5-star hotel and luxury residential villas at this particular place. Moving on, Prestige Estates will be also in focus as ET reports that Prestige, Weller, RC Group are in talks to raise about talks for 7,000 crore public housing development deal. Moving on, Coforge will be in focus as ET reports that Coforge and Cognate Technologies both are moving forward towards the planned merger which was going on. And Symphony will be also focused as company commented on their recently launched air coolers that they will be driving further growth and innovation in this particular segment going forward. And lastly, Zygel Prepaid will be in focus as companies allotted about 1.13 crores of shares via QIP. And if you look at the allottees, it include Society General, ODI, ICICI Prudential Technology Fund, Nuvama, a Dynamic Growth Equity Fund, and a Bank of India ELSS Tax Saver.
Quite a big name coming in the allottees. Thanks very much, Jane, for all that detail. Moving on, let's get you some reports on defense space especially. Elara Securities and Phillip Capital have come out with brokerage notes on defense stocks. Elara has maintained a buy on HAL and BEL. Phillip Capital has initiated coverage on defense stocks with a buy rating. Gaurav is here with more details on these brokerage notes. Gaurav, over to you.
Well, yes, a very strong outlook coming up on defense segment from brokerages. So first, let's talk about Phillip Capital. What they believe is that the growth perspective for this entire segment is going to be strong on the back of the strong execution cycle and at the same time order book. Other than that, they also believe that there are a few other key drivers like timely execution, strategic modes, cash rich balance sheet, in-house R&D facilities and favorable government policies. And on back of this, that is the reason they are being bullish about this segment. They believe that the margins for the core business are likely to remain strong, and they also maintain their positive outlook, and with this they have initiated on a few companies. So we have got BEL where they have initiated with buy rating at a target price of 390 rupees. Other than that, they have initiated on Hindustan Aeronautic with buy rating, Data Patterns and Solar Industries with buy rating, and at the same time they have also initiated on Bharat Dynamics with neutral rating at a target price of 1400 rupees. Other than that, Elara Securities is also being bullish on this segment. What they are saying is that they are expecting firework in Q4 because of the indigenization, and they also believe that India's imports have dropped almost by 28% and contract awarding is likely to go up from here on, and that is the reason they have also maintained their buy rating on Hindustan Aeronautics, BEL, Bharat Dynamics, whereas on the Bharat Dynamics they have actually downgraded the rating to accumulate but hiked the target price to 1300 rupees versus what it was at 1230 rupees. So overall a very positive note coming up from brokerages on the defense segment, and on back of this we will be also watching out on these companies in the day coming ahead.
Alright, and with that, completely out of time on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Priyanka Uppal, as well as the entire team that put this show together. Thank you so much for tuning in, but you don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.